I started out in investment banking, and first job out of university, I was at Goldman's and selling fixed income securities. So very early on then, I also joined iShares and the world of ETFs, of exchange traded funds. And I've been doing ETFs for many years, stuck with it since. Always like the niche part, the entrepreneurial bit. When I joined iShares, we were the guys with the funky marketing in the corner. We were trying this thing of how can we wrap assets into a different form and give people access. We did the same thing with gold, physically backed gold ETFs. Then I worked for a traditional exchange, and then I got approached to step into the crypto world. And my initial reaction was like, I'm interested. I don't know enough about it. The team at the time at 21 Shares, and they're like, oh, it's a new industry, the ETF bit, you can learn the crypto bit. And after, initially thinking, no, I'm not sure, it's not for me, I got completely sucked in, loved every minute of it. I truly believe that step one, ETFs, in the not too distant future, why wouldn't you have tokenized assets? So replacing like the wrapper, the ETF wrapper with a token wrapper, because then what you open up is a global audience. Anyone who can access the DeFi space, they get access to this. Even if you don't care about crypto, whatever, there is a finite amount of Bitcoin. The demand is growing. The price can only go one way.
Welcome to Sat Chats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of a Bitcoin the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So, if you're brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart, Bitcoin Dad. We have number 117, Isabell, in the virtual studio today, and she has a ton of experience in the financial arena, specifically ETFs. So I'm really looking forward to learning more about ETFs because the Bitcoin ETF is actually what got me to finally look at Bitcoin properly for the first time and go on this whole big journey that ends with you seeing me here in the studio protecting you and your loved ones from my Bitcoin laser eyes with these sunglasses here. So Isabell, why don't you take a moment to introduce yourself to our satillionaires listening along in the audience, and then we'll jump right into your Bitcoin story.
Sounds great. Thank you so much for having me, Stuart. And it's great to be here and tell you about my Bitcoin story. Actually, it's sort of tagged on a career in very traditional finance. So I started out in investment banking, and first job out of university, I was at Goldman's and selling fixed income securities. So it's been a start like many others. So really stepping into the financial world and then getting the first job. And as you mentioned, very early on then, I also joined iShares and the world of ETFs, of exchange traded funds. And I've been doing ETFs for many years, stuck with it since, with a few detours, but primarily, so very much I was very TradFi, like I say, focused initially on fixed income and then ETFs with different asset classes. And I think the interesting thing was I was working for big organizations, but really for always like the niche part, the entrepreneurial bit. When I joined iShares, it's hard to believe now because it's such a big beast now. But, we were the guys with the funky marketing in the corner, part of Barclays Global Investors. But we were trying this thing of, how can we wrap assets into a different form and give people access? And then also one of the next companies I worked for, ETF Securities, we did the same thing with gold. So physically backed gold ETFs. And then I worked for a traditional exchange, and then I got approached to step into the crypto world. And I tell you, my initial reaction was like, I'm interested. I don't know enough about it. And the team at the time at 21 shows that they were amazing. They're like, oh, it's a new industry. We all learn together. Don't even worry about it. You know, the ETF bit, you can learn the crypto bit. And after, initially thinking, no, I'm not sure. It's not for me. I got completely sucked in, loved every minute of it. And and here we are. So really still looking at ETFs, but now very much so with the crypto lens. And yeah, we can go into all of the details and what that means. But yeah, it's been quite a journey. And right this at the beginning, always when people ask you, oh, and the career and when did you decide, there was, I guess, the common thread through all of this is like just saying yes to opportunities. So that's what got me here and into the crypto world.
Can you explain to our audience of beginners, and really even to me as well, what is an ETF, really?
An ETF, so it stands for Exchange Traded Fund. So the first bit, the E bit, exchange, meaning a regulated stock exchange. So the New York Stock Exchange or NASDAQ, or here in Europe, the London Stock Exchange, Euronext. So you have a product that is trading on an exchange, exactly like a share, like Microsoft, Nvidia. So this is, throughout the trading day, and we're talking very much the traditional financial world here. So throughout the trading day, it trades. You can follow the price movement, and the reason why, and this is the F, why you've put funds into this wrapper is to provide liquidity, to really make it accessible. So you buy ETFs exactly as you would a stock. So your normal brokerage account, you don't need to set up anything special, and the ease of access is the prime, I would say, selling point of ETFs, and really was the basis of the huge success. So it's not a product that's been around for too long. I mean, it has been compared to sort of crypto, but if you think about it, as 30 plus years, couple of products, people were really skeptical. Why do I need this? And basically, the benefit of this, think about it as a wrapper. So it's a wrapper, and you can put in different things. You can put in a basket of stocks, or you can put in a single stock, or fixed income, or gold, or crypto. But the ETF really is just the vehicle how you buy and sell it. Does that make sense?
It's almost like if I had you've got that wrapper you talked about, and I could say, all right, I could go and buy shares of Apple or shares of Tesla or shares of Nvidia. I could go out and buy some bonds if I were into that. Not me, but I could. You could also I could go buy some real estate in New York City, and I could go buy some gold. But I could also go to an ETF that has a wrapper, and the ETF says, look, we have a stock portfolio that we feel is a super tasty mix of high performers. We have some gold as well, and we have some real estate. Really, any asset, anything that could be worth investing in, you could fill up that whole wrapper with almost like just a mix of items, and then you could almost say, all right, guys, we're gonna break up this whole wrapper into 100 units, and we will sell 100 shares out to anybody who wants a piece of this. So it sounds like an ETF is a way to take some assets that could be difficult for people to deal with on their own and kind of turn it into this unit that you can then sell shares of. Is that right?
Absolutely perfect. Exactly. So, and as you said, you can also, because you can have a number of different things. So take the S&P 500. Of course, you can buy all of those 500 stocks in a certain percentage or mix it to however you want to, your preference. But then you have 500 transactions. And for retail investors like you and me, we have to pay fees 500 times. Not the smartest thing, and all your results and your profits are probably eaten up by just the trading costs. Or you can buy one ETF, so one transaction, which gives you exposure to all of those 500 stocks, or like you say, fixed income or real estate, which is also something which is much more difficult, or you can break it down into small pieces and then make it more like there's a whole, and this is where even sort of the initial idea of ETFs and kind of there's a parallel into the crypto and crypto investing world as well, because it democratizes the process. So I, as Isabel with $100, get exactly the same access as a big pension fund with $100 million to invest. So that really, it brings us on the same level. So that was really, or it's one of the huge benefits, because it's easy to deal with. It's very transparent. You have throughout the trading day, you have live prices, and you can really follow what's going on in the products. And like I said, there's many parallels sort of in the innovative part, then also stepping into crypto in terms of the democratization, given easy access to different areas which were not too easily accessible previously.
One thing that's coming to my mind hearing you explain the ETFs. We've had some guests on Sat Chats who have talked about how the future of the world includes turning everything into a token. And an example of this would be, hey, right now I've got a multi-million-dollar home in Florida, and I'm going to turn that multi-million-dollar home into 1 million tokens on this blockchain or through this crypto, through decentralized finance. I'm going to tokenize this piece of real estate because nobody out there has multiple millions of dollars for me, but I can break it up and say, hey, look, for $15, you can have one share of this investment property in Florida, right? Or you could buy 10 shares, 100 shares. You're taking something and you're breaking it up into smaller pieces and making it easier for people to deal and trade with. And it almost sounds like ETFs are an earlier version of tokenizing a collection of assets and commodities to kind of make it easier for people to access, right?
It's going to sound like we agreed on the whole narrative, but not spot on, absolutely. Because, and so with people and colleagues in the ETF world, and I truly believe that, but because, like I said, ETF is an access vehicle. Tokens are access vehicles. ETFs, or going forward, and keep in mind, ETFs are still in the regulated space, TradFi, regulated exchanges, old world, if you will. Tokens are on decentralized exchanges. Again, different access route, different audience. But I truly believe that, as you say, step one, ETFs, you have this kind of vehicle. In the not too distant future, why wouldn't you have tokenized assets? So replacing like the wrapper, the ETF wrapper with a token wrapper, because then what you open up is you stepping away from the regulated exchanges. You can have a global audience, anyone who can access, the DeFi space, either through whatever they use, other sort of intermediaries, if they choose to, or they can truly, if they truly believe, I want to be my own bank, I can do this, I have my wallets and everything. they get access to this. So I totally agree. So if you fast forward into, well, what's to come, I really think, I mean, ETFs is right now, and it's a growing industry, and it's, the adoption is still, I can't say in its nascency, absolutely not. 17 trillion is not a tiny bit of the market, but there is huge growth prospect still. And with some of the kind of expert in the space, we're really trying to figure out, when is that tipping point? When are we moving away from the ETFs and focus more on the tokens? Because, like I say, then again, you have a totally different audience. And here, this is the bit where a lot of the institutions, they're looking at it because they can't afford to miss that moment where, now we're moving into that space, and are we ready? How do we tokenize this? How do we deal with this? The custody, the settlement, all of that good stuff, the infrastructure really behind it. And please stop me if I'm going down the jargon and gobbledygook route. So happy to explain all of this if you want me to.
It's interesting because it does seem like ETFs came along to break up the traditional financial system into smaller pieces that are easier for people to buy and trade. And because, like, what am I can't go invest in, like, I'm not we've had commodity traders on the show as well. They're like, yeah, I'm trading like coffee. And I'm like, or like, I'm going long on wheat. And I'm like, what are you talking about, man? Like, the world of trading wheat and coffee as like a stock market style share, like, that's so far beyond what I can understand. These ETFs, they come on. I do know there's a gold ETF, the Bitcoin ETF. It's almost like, I guess, do you think that the tokenization of real world assets, of real world things through cryptocurrencies on decentralized exchanges are going to replace ETFs that are sitting in traditional regulated spaces? Or like, what was it? Was the ETF the prototype and these tokens are going to be the way of the future? Or are they going to grow alongside one another? And you're going to be on this side if you prefer more standard, regulated, Wall Street style, London Stock Exchange style activity. And you're going to be on this side if you want to be a DeFi crypto, futurist.
In the short term, it'll stay in the regulated space because the regulation on the crypto side is evolving. I mean, we're making huge progress, and this is fantastic, but there's still so many gray areas where people are a bit, or the ones that are not totally in sort of the topic, shy away from it. And this is, and I'll come back to your question, but just a little detour, because also, have you ever looked at headlines in the media saying crypto or digital assets? And I've done this for a presentation. It's a totally unscientific polling, but just if you look at headlines where it says crypto is always fraud, you're criminals, it's all money laundering, blah, blah, blah. It's all negative. If the headline has digital assets, it is, oh, the future of finance, and look, isn't it wonderful? And everybody's using it. So I think there really is this image. And if, like I say, if you're not totally in the topic and you know what all this is, and you know also some of the maybe jargon, you will stick to the regulated space for sure. And I'm clearly very much pro crypto and invested and everything. But do I have all my pension money sitting in it? No, no. You need to diversify. So maybe I'm still too old school there. But still, it means it will shift. It will shift slowly. And here I would really say, also on the tokenization side, there are different drivers. It would make total sense for things to move from sort of the regulated exchange to the decentralized exchanges, and people have a lot more freedom. But we do have countries, nation states, we do have financial regulators, And what they will tell you is like, our primary mandate is to protect the consumer, is to protect somebody who doesn't want to know about finance and, doesn't really care, but also cannot afford to lose all their money. So that there is movement, but baby steps. So it'll take quite a long time. And I also think it doesn't need to be either or. It doesn't need to be, oh, are you regulated or deregulated? Or, which space are you acting in? As long as you're not going to lose your money, you can trust the system, you're not going to get hacked. And I think that we have quite a long way to go. But ultimately, you want to buy gold or you want to buy Bitcoin, and you know that you own it. How you get there? Most people don't care. I always draw the comparison. I'm sure you've heard it before as well with your phone, like the operating system of your phone. Do you know how it works? Do you know what iOS is or Android or whatever you're using? I don't. Does that prevent me from using my phone all day, every day? No. Payment, everything, maps, transactions. So I think this is where we're going to get to, where the technology or the how this is executed or the implementation really is in the background. And people just say, I want to buy Bitcoin, I want to buy Solana, whatever it is.
So if you buy the Bitcoin ETF, do you really own Bitcoin the same way you do when you've got it in self-custody?
Yes. And there, I mean, you need to look at what product you're buying, but most of the big reputable ETF issuers, yes, 100%. They are, if you're buying the spot Bitcoin product, what that means is you give the issuer $100, and for those $100, what the issuer does is buy the equivalent amount of Bitcoin. So it's 100% physically backed, and the other way around. So if you want your $100 back, that part of the fund is sold in order to give you the $100 back. So the Bitcoin is sold, and you get your cash, your fiat back. So this is it. It really is physically backed with most issuers. I have to put that caveat in there. And this is when those products got approved. There was so much scrutiny, and the hours and hours our legal team, when I was still at 21 Shares, were spending on the phone with the SEC, with everybody, to explain how does it work, and is it really safe, and who are your custodians, and how can I make sure that the Bitcoin or the underlying currency is actually there. I think it was Bitwise, one of the other ETF issuers, who actually you can go to their website and then also see sort of the addresses and the transactions. And I mean, to most people, when you look at those keys and strings of letters and numbers, means nothing, but you can really go through and then really say, right, somebody bought a new shares, or new shares of the ETF were created. So the issuers also want to be really transparent, because people were so skeptical and really say like, what is going on here? Do they really have what they say they have? But, that there are audits in place where a third party comes in and really checks with the issuer, right, your fund is a 1 billion big, show me where the equivalent collateral is for those holders of the product. So, but because it's what's the difference then? I would say, again, ease of use. Because if you're like, you have your 401k and you can buy the spot Bitcoin ETFs now, because we have come quite a long way. So you can add that into your pension pot. Right now, you can't actually, if you're holding it in self custody, you have to manage all of that yourself. I guess the difference is you do pay a management fee, which you can think as, somebody's doing all the paperwork or the admin for you. If you're holding it yourself, you take all the risk. You need to look after your seed phrases and all of that stuff. So this is kind of, you give up a small basis points or, fraction of a percentage to hold it, or somebody else does the work for you. But absolutely, you can do the work yourself. And when when the products were launched, a lot of, especially like Bitcoin OGs, or it's like, why would I use this? Like, what you guys are doing, I can do this myself. But this is absolutely true, because it's like, you're not the target audience for this. Of course you can do it yourself. You probably get, I don't know, tighter spreads or whatever when you're trading it. But this is for people who don't have that capability, or quite frankly that interest to get so far down the rabbit hole and set it up themselves.
Yeah, I can definitely see that point of view, Isabell, because most Bitcoiners that I speak to who come from an earlier time period dislike the ETFs because it's taking Bitcoin that would otherwise be transacting on the Bitcoin network and taking it off to one side where it gets chopped up into paper shares for that individual ETF to deal with. So it's almost like, let's say like 1,000 Bitcoin that might need to otherwise move across the Bitcoin network in order to be traded, right? Driving transaction fees, rewarding the miners. Instead, it's going to go off to Fidelity, and Fidelity is just going to keep it in their address. No transactions, no sending it to and from. They're just going to say, hey, out of the 1,000 Bitcoin we have, we're going to divide this up into 100,000 shares and circulate that in and among our accounts. And as you buy and sell, we'll just record it ourselves. And there's never really any activity that goes back to the Bitcoin network.
Sometimes, it sounds like, oh my God, the suits are coming, the institutions are stepping into this space. And if you look at it, the reason why Bitcoin was created, and a sort of ethos around it, and having centralization, having taken out the middlemen, really having a decentralized network, interacting with each other. It's almost it's more philosophical approach. But then, yeah, now Wall Street's coming in and they're doing the thing they always do. So, I totally, I get it. And I also get there's some, because it goes against the initial idea of why this was created. um, and I find it fascinating, and sometimes you get strong reactions. I don't know if you've had that before, and I've been selling like financial products for a long time, and you go to investors, private investors, or more the institutional space, and you present an idea, and they either like it or they don't like it, or sort of, you're talking about a financial product. When I did sales conversations or pitches or whatever, for crypto ETFs, oh my God, the emotional reaction you get from people. And there's no in between. You either get people who are like, oh my God, I love it and I want to know all about it, or people are like, you guys are all criminals, get out of my office. So it was really interesting to see that reaction. And now I think those lines are really blurring, and it's an evolution. And I really think this is also part of the why it's so fascinating, this space, because you have almost two worlds colliding, and who's right or wrong, who's going to be more dominant. Well, I know, and before the Bitcoin launch, you saw all of the adverts coming out. And some issuers decided, very safe, very, targeting the boomers, and the crypto native communities were really laughing. It's like, what is this? Like, come on, what is this boomer video? But then on the other hand, you had some really degen aimed other promotional videos nobody in the crypto space would understand, and all the hints and all the inside jokes. But then that audience was never going to buy the ETF. So there's a lot of dynamics, and coming from different angles. But yeah, no, I get that. Is that really the desired thing? Was that the intention by creating Bitcoin, putting an idea like that into practice? No, probably not.
Well, from my perspective, because I'm class of 2024, and the Bitcoin ETF was what got me to look at Bitcoin more deeply. I was on LinkedIn and I saw a news headline in January that talked about the Bitcoin ETFs were approved. And I remember thinking, ETF, what is an ETF? And then Bitcoin, whoa, Bitcoin is still around. That's wild. I clicked on the article and it talked about how Wall Street was ready to start trading Bitcoin through these vehicles called ETFs, which I later learned were these, wrappers for people to gain access to things that they couldn't access easily. So it was like, if Wall Street is ready to trust Bitcoin, I should figure out what Bitcoin is as well. Because I remember the guy talked to me about it. Now I should, and it was also like Wall Street, I felt was like this big, heavy gorilla, and Bitcoin was a bridge. And if they felt confident enough to take a step on this bridge without it snapping underneath them, it must be reliable. It must be sturdy. And when I get to this question of, hey, as a Bitcoiner, I want to be an OG Bitcoiner. I'm not. I've been in Bitcoin for almost 2 years now, and that ain't a lot of time, but I want to be like an OG Bitcoiner who says, hey, man, the true purpose of Bitcoin is electronic peer-to-peer cash. It's to get around all of these governments and all of these traditional institutions. And things like the ETF are no good because it kind of takes Bitcoin and just makes it kind of sit in some organization's wallet while they do a bunch of activity on their own. I want to be like that, but when I take a step back and just put on my thinking cap, I have to say to myself, Isabell, if all it takes for Bitcoin to die is for Wall Street and other major stock markets to adopt it as a good thing, then something must be wrong with Bitcoin to start off with. And I need to get out of here, right? Like if the worst thing for Bitcoin is for more and more people and organizations and institutions to get a piece of the action, like that's not, something's wrong there, right? Like Bitcoin must be adopted by all these people in order for us to get where I want us to go, right? Which is for I want Satoshis in every wallet. And if we're going to get Satoshis in every wallet, we have to move past the original gangsters in Bitcoin and say, hey, you know what? If you don't know the first thing about Bitcoin, but you want to get involved with Bitcoin, but you don't know a lot and you can't afford to lose your nest egg, hey, why don't you diversify 2% of your retirement portfolio into the Fidelity Bitcoin ETF or the BlackRock ETF or Bitwise, and you'll kind of proxy your way into the action.
Yeah, could not agree more. And because it did put it on the map and on people's minds, and it moved it out of the sort of obscure techie, we don't really know what you guys are doing here space. It's a lot more mainstream, and the gauge where people are looking, oh, where are we in the market cycle? And it always used to be an indication, how many Google searches are there, what is Bitcoin, blah blah blah. It's no longer a good gauge because people know what Bitcoin is. That search does not indicate anymore, are we, past it? Are we already sort of coming back into a bear market after a bull run? So I think the knowledge about it, and well, maybe the awareness. We still need to work on the education and the knowledge, and that's why I love your program, because you do take the mystery out of it. Is like what it is, what it isn't, how do I deal with it, what did other people do, and just share experiences and based on facts. And just for your comment on the criminals and the shysters out there, it is that there are it is a space which, to a certain extent, is not heavily regulated yet. There are parts of the industry which is totally like gambling. If you go down, and I'm not saying, and it makes me smile when people already talk about like the blue chip cryptos. So Bitcoin, Ethereum, Solana, all of those, and blue chip, just to explain the term in like traditional finance, those are the very like solid, prestigious companies. So you already have like blue chip cryptos, and then you have the other end of total nonsense, the meme coins, the really nonsense. Nobody stops me from launching the Isabell coin. What's behind it? Absolutely nothing. Maybe my few followers on the social media space. That there are. It's some of it is the really scammy get quit rich scheme, which nobody should touch because the only person getting rich is the person launching their coin. But then there's a whole part of the industry where they're really building the future of finance or the future of infrastructure, or is there a better way of remittance payments, or another super use case for which is never talked about, because people always think crypto is trading, it's price go up and down. No, think about it. Big manufacturers, their supply chains, to really say, well, where's the origin of our product, and being able to put a tag or token, or to the ingredients or to the components of your product, and then bring it together, and then really have that recorded on a blockchain where it's super transparent, who was involved, what went where. These are real world use cases where the technology, that is the exciting bit, and this is why people invest seriously into those coins and tokens of those blockchains where this is happening, not the Isabell nonsense coin. So, but this is where I think the education is needed, the explaining what is what. For equities or for stocks, you would never say equities, and then measure everything with the same characteristics. Imagine, how do you evaluate a stock, say airlines and manufacturing and, I don't know, some other thematic, defense? You wouldn't use the same parameters to measure all of this. In crypto, because everybody puts everything in a big bucket, it's crypto, and try to measure everything. But no, what are we talking about? Is it a blockchain? Is it an exchange? Is it a lending protocol? Is it, we need to have that distinction. But in order to do that, people need to take an interest. And so this is also why I think like Bitcoin and the ETF was sort of the first step to put it on the map, and hopefully, yeah, spark people's interest to learn more.
Haven't the Bitcoin ETFs come out of nowhere to perform better than all the other ETFs, or they came at it like lots of money poured into them very quickly, or like, the gold ETF took, I don't know, decades to get where it is, and Bitcoin's ETF just went like what was your what has been the performance of those ETFs, and what was it like around the time that it was being approved, since you were in that space? And what do you think, where do you think that's all going? What's the future of that look like too?
It was super exciting, of course, when the approval finally happened. And I would love to say they came out of nowhere. No, it was years of speaking to regulators, putting in the proposals, and another application that gets rejected. It's been a very long journey, because the idea of having or putting crypto in this wrapper is, it's been many years before they finally came to the market. And like I say, Europe was ahead of the time. So the first crypto ETP in Europe was, launched in 2017, 2018. You had the first people stepping into that space. But again, you needed to really go and talk to so many regulators to explain, first of all, what is it? What will it do? Is it going to blow up your market and everything? So it's been many years to prepare for that. And then they went live. And before they went live, you can imagine, so I was the global head of distribution and, responsible for the US market. So we were asked for all of these predictions, like how many assets are we going to gather? Like how much money are we going to get in the first 6 months, the first year? And everybody was super bullish. Everybody was like, this is going to take off. This will be crazy. The actual numbers, nobody could have dreamt of. So when I put down, and I still to this day, I thought, oh my God, I felt sick to my stomach. I'm like, I'm really sticking my neck out. Like, I believe we can achieve this, but oh my God. And, so the yearly target we put down, we smashed through it like within 4 months. And it was the same for all of the other issuers. So I think, why did they perform like this? And why did they gather so much money? You could see the pent up demand. You could really see like people wanted to get into the asset class and wanted an easy vehicle to get into it. And that's, that really is. And sometimes it is by people who, do they care about the original idea and why Bitcoin was created? No. Are they in it for the price action and, getting the return on their investment? Yes. But here, the other component, we haven't talked about it, but I'm sure people are aware, there is a finite amount of Bitcoin. Most of it is already mined. A lot of it is now held. Quite a big proportion has been lost, or nobody knows where that sits, in wallets that have been thrown out, laptops that have been ended in landfills. But if you think finite amount and the demand is growing, even if you don't want anything, you don't care about crypto, whatever, even just those two components, super basic, like supply and demand, almost not forces you, but, you'd be crazy not to at least add a little bit to your portfolio to benefit from that price action. And and this is also why people, like I say, they don't necessarily care about what I described by this new technology, new industry being built. They just see limited supply, demand going up, the price can only go one way.
What do you think the cons are of the Bitcoin ETF? Does that management fee kind of erode your wealth over time? Whereas if you just had it in Bitcoin, there's no fee to just have it yourself. Or, are you risking a government coming and saying, you know what, we haven't gotten enough Bitcoin ourselves. Now we want to seize Fidelity's Bitcoin. We want to seize BlackRock's Bitcoin. And if you have the ETF, then your shares are gone and they're going to pay you out in US dollars, which are going to go down to zero anyways. But if you have it in self-custody, it's like, you come get it, man. Like, what are the cons of the ETF? I know there's a lot of pros that we've gone over. Are there any drawbacks?
The scenario you described, government stepping in, seizing assets, I think that we have a whole different problem. And I really hope this will never come to pass, but you never know. The world's crazy at the moment. The downside is, and the management fees is minimal, and because of the current performance and the price performance, it doesn't register. It doesn't really dampen your return, but big caveat also, always think about it. Past performance is not a predictor of future performance. And I have to say that this is still my old traditional hat on, but it's true. Like, really be aware what you're doing. The other downsides, like you say, you hold that exposure with an intermediary. And fortunately, most of us are in a situation where we do have a stable banking system, not crisis proof in all aspects as we've seen in the past, but you do have situations and this is a terrible example, but imagine sort of your country gets hit by a war, gets attacked, or and we've seen this when Russia invaded the Ukraine. Can you can't pack up your traditional bank account and go somewhere else with it. You can if you have your own wallets. Um, Also for countries, say Argentina, crazy inflation, people get paid in pesos and immediately turn it into stable coins, and that would be a whole different podcast. But you really are your own bank. Like, and this is, and everybody has different sort of beliefs and risk thresholds. And, if you really think, I don't trust my government, or I don't feel comfortable, I want just part of my wealth. I wanted, people hold gold bars, people buy precious stones or whatever art, to be able to say, no, I can take this with me. This is transportable. I don't, I don't need to go through all the paperwork. So this is the downside. This is a different approach if you don't want, to use the ETF to get the exposure. Um, yeah, so I think that it's sometimes people have different views, different preferences, and there's no right or wrong. You just have to figure out what works best for you. And what I would also say is try both. And until you sort of dabbled, but this is really, please, to all of the listeners, try it with an amount of money you can afford to lose, because I shouldn't say that, but I put my hand up. I've lost money because I messed up. I lost my seed phrase. I thought I had it. I didn't. That's it. So there are risks involved, and sometimes, but at the same time, if you're doing it, then you're really learning, and then you can, if you have interest in that space, for sure, buy some crypto, not via an ETF, but via different means, and figure it out. And because then you will also see, and I'm so happy about people addressing the user friendliness now, even with wallet addresses and things like that, because that is built, so to say, by techies for techies, or by programmers for programmers, which is absolutely true. If you're a cryptographer, all of this makes total sense to you. If you're more a person, man, woman of the street, is like, what even is that? So it's also within the DeFi and crypto space, or crypto native space, things are getting a lot more user friendly, which also I think will help the adoption, and maybe move away from the more traditional access routes into that space.
Well, this whole subject, Bitcoin, ETFs, TradFi, going into DeFi, it's so big that we will never fit it into a single chat about sats. So we do ask each of our guests, Isabell, if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. Would you be willing to come back on the show to keep, chatting about sats in 9 months?
100%. I would love to. And, let's really see where we are and what are the developments. And, things are moving fast. And also, what I'm totally fascinated by is the different regions of the world, how everybody's dealing with it, what the appetite is, what the adoption is, how the regulators are, dealing with it, how the general populations are dealing with it, because there you really have different drivers. Totally fascinating. And yes, I would love to come back in 9 months and see what's been happening.
Yeah. All right, let's go. So let's recap the conversation with Isabell for all our Satillionaires out there. Number 117, you've got a big background in traditional finance. You have a lot of experience in the traditional financial system, and were eventually approached to dive into the world of crypto. And you have this unique blend of understanding now, thanks to your exposure, both the old style and the new style. And I think what we've learned here today is that there is room for both of these styles to operate for likely decades to come. ETFs are kind of like a prototype for tokenizing real world assets through different cryptocurrencies. And it was almost like the tokenizing effect before tokens were even a thing. You want to pull up your Charles Schwab account, or your Fidelity retirement and say, let me get a couple of percentage points worth of Bitcoin. You can do that now thanks to the ETFs. Hopefully you can just invest in the Bitcoin ETF if that is the road that you wish to take to kind of get into Bitcoin, because we do believe here on this show, Isabell, that if you just get started, you'll eventually learn enough to realize that you want some Bitcoin in self-custody at the end of the day. You might still hold the ETF. You might still leave some Bitcoin on the exchange. But if you learn enough about Bitcoin, you'll likely want to have some Satoshis in a wallet that you control, that you have the seed phrase for. And that's what we're driving at here on this show, is to put some Satoshis in every single wallet out there. So where can we send our Satillionaires if they want to, spend time with you online or see what you're up to?
Yeah, absolutely. And if anybody has any follow-on questions, please connect with me via LinkedIn. That's probably the easiest, or go to the website. So I run a company called IMC Consult, and there you also find my contact details.
I like that. All right, awesome. We'll put all that information in the show notes as well. So I'm going to take a little break here with our lead sponsor, Ithaca Hummus. I've got the jalapeno lime. I'll serve as your taste buds here in the studio. Cheers.
All right, next time I'm in the US, I will need to give it a go.
Thank you, Ithaca Hummus. Now, I'm going to make you an offer here, Isabell, okay? I'm not sure if you knew this was coming, all right? But we do have that Bitcoiner ethos here on Sat Chats, which means that we believe in exchanging value for value. You brought a ton of valuable insights into the world of ETFs, and specifically the Bitcoin ETF, for all our beginners in the audience who are wondering, how can I get some exposure to Bitcoin without needing to gobble up some learning curve that I'm not ready for yet? And as much as we try to break that down into bite-sized pieces so that you can go from zero to stacking sats in self-custody with us here at Sat Chats, there are some who just point blank need to start with something that they can understand easily. And for many, that can be the Bitcoin ETF. So hopefully by listening to your episode today, they're ready to go out and get some exposure in their retirement portfolio or their investment portfolio. So I want to make you an offer in exchange for all the wonderful value that you brought to our show. Now, you can hear old Ulysses S. Grant dropping onto the table here. $50 is what I'm going to offer you, or $50 worth of Bitcoin. Now, Bitcoin is currently exchanging for $112,300, which means you can get 890 Satoshis for every $1. I'm going to multiply 890 by 50 and offer you 44,500 sats. Which money do you want?
Please send me the sats.
Let's go. Yeah. Come on. Let's go with that. Yeah. What are you going to do with this anyways? This is this form of money has borders, and you're not even in the United States,
And then, do you know what? We can compare in 9 months. Where are we? Let's see. I'll keep them separate, and then we can talk about, I don't know, performance drivers or whatever you're interested in.
Let's do that. So we're going to send these 44,500 Satoshis directly to you. You bring our scoreboard to 110 guests that have stacked the sats, along with 9 who chose the cash. So thank you for stacking those Satoshis with us. All right, Satillionaires. Your support helps us grow the show. And when you grow the show, you make more brand new Bitcoiners. And when you make more brand new Bitcoiners, you drive Bitcoin adoption and you take us to a world where every single human on earth is earning in sats, saving in sats, paying in sats. You're driving us to a world where Bitcoin is the money that we all use. So you can support our show by subscribing to our YouTube channel and by turning on notifications while you're at it. Hit that bell icon. Our goal is to put 10,000 subscribers underneath our Christmas tree. That's December 25th of this year. And to thank you for helping us get there, we will be selecting one lucky subscriber at random from among you and dropping 2 million Satoshis on your head. You can join us Monday through Friday at 11 a.m. Eastern right here on YouTube. Monday through Thursday is Sat Chats episodes just like the one you finished listening to. Friday is our live game show, TikTok Next Block, the game where you play for 1 million sats. If you want to sign up to be on either, go to satchats.com and you'll be able to find where you need to go. You can also donate your sats to Sat Chats, either on-chain or through the Lightning Network. We're like a teaching hospital here, Isabell, so we'll take those Satoshis and we will bundle them up into the next $50 or $50 worth of Bitcoin segment to help mint the next brand new Bitcoiner. If you'd like to sponsor either Sat Chats or TikTok Next Block, you can email me, show@satchats.com. One final note, Sat Chats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. Until next time, keep stacking sats. Bye-bye.